Hi, my name is Andrew Wall, and I'm the Vice President of Chartered Accountants for Information Technologists. Is it better to buy a car under your name personally or through a corporation? And is it better to lease or to borrow money to acquire a vehicle? These are two of the most common questions we hear all the time here at CA4IT when it comes to buying a car. So if you're among those who are wondering what the answer to those questions might be, let me help you out. First, let's address the question about whether it's best to lease or to buy. While most people believe this to be an accounting question, there are other factors that have a greater impact on your decision. Like, for example, do you want a brand new car, or would you be happy with a car that's a few years old? And what are the current finance and lease rates? How many kilometers will you be driving? And finally, are you the type of person that will drive the same car for 12 years, or do you want a new car every few years? These are the questions that should ultimately affect your decision. With regards to the tax deduction, there are two methods for calculating the automobile expense. One, mileage, and two, actual expenses. In most situations, the mileage usually nets a higher deduction. If you use the mileage rate, the deduction is the exact same whether you lease or buy. However, if you have an expensive lease or simply don't drive much, then using the actual expenses may result in a greater deduction. So let's evaluate the differences in deductions if you use the actual method. With leases, you can deduct the total amount of the lease up to a maximum of $800 a month. With a purchase, you can deduct a percentage of the purchase price of the vehicle each year due to the vehicle's depreciation in value. The maximum amount that can be depreciated for a passenger vehicle is $30,000. The vehicle can be depreciated at a rate of 15% in the first year and 30% of the remaining balance for each subsequent year. While there is a difference between these two methods, the bottom line savings is marginal. Now on to the next question. If you're going to purchase or lease a car, we usually recommend that you do so under your own name and have your corporation reimburse you for its use of the vehicle. If the car is in the company name and you use the car personally, you must reimburse the company for your personal use percentage of the expenses or take a taxable benefit into your personal income. You'll also need to calculate a gain or loss when you sell the vehicle. This means more paperwork for your accountant and higher accounting fees for you. One of the great benefits of a corporation is limited liability. However, if your assets are owned by the corporation, you've limited the liability to your assets, which defeats the purpose. When you're making major life decisions, such as purchasing or leasing a vehicle, we highly recommend that you contact your accountant to ensure you're making the best decision. If you have any questions about automobile expenses or are considering the lease or purchase of a new car, please feel free to contact me directly so we can discuss your particular situation and assist you in making the right decision for you. I'm Andrew Wall, and I look forward to meeting you personally.